Delighted to say that our results for the half year were a record for the company. We made more money in the first half of 2016 than we made in the whole of 2013. We did that at a time when we halved our debt from the year-end period, so balance sheet's in great shape. And of course, we've been extremely busy post-period end on M&A activity. We broke through the £50 million profit barrier for the first time in a 6-month period, £50.1 million, up 16% on the previous year. We smashed through the £2 billion revenue barrier as well, £2.34 billion, up 33%. And we brought our debt down to the level where our debt to EBITDA is actually 0.7 to 1, so at the lower end of the 0.5 to 1.5 to 1 range that we state we're comfortable with. And all of that gave us the confidence to up our dividend by 20% as opposed to the 10% we've been used to more recently. So good all round. The operational performance in the business was fantastic. If we take motor division, which is obviously the biggest part of our company, a good all-round performance. New car retail was up 2%. Fleet, we had a fantastic first 6 months, up 15%. Used cars showed growth, and of course the highest margin part of our business, after sales, grew by 8%, which is very encouraging. So motor was good all round. Parts had a record first half performance as well. So yeah, everything that we hoped could go well did go well. So yeah. We've been extremely busy post-period end. You'll have seen that we have accepted an offer for our parts division from Alliance Automotive. Alliance Automotive are actually one of our customers. They approached us and offered us £120 million for the business, which we think fully reflects the value of that business. What it's allowing us to do is redeploy that money back into a higher growth sector of the core motor division, which of course is what we do best, is buy and sell cars and repair them. And we think we can deliver a higher level of shareholder return with that war chest. We've already started to deploy it. Within a week of announcing the parts division, we've announced the acquisition of Drayton Group, who are a 7 Mercedes-Benz site dealership group, much admired in the industry. We've paid £55.4 million for that. Both of those deals will complete at the end of October. The parts deal is subject to regulatory clearance and shareholder approval from Looker's perspective, but pleased to say that we've already deployed some of that money and are at a very advanced stage of announcing a second deal, so all good. Yeah, well, we've got two priorities in the next sort of 6-12 months. The first is around the whole area of customer experience. I believe that that's the key thing that will differentiate us from our competitors. So lots of work, lots of investment going on in people, technology and brand, and you'll see the manifestation of that in the coming weeks and months. So we're very excited about all of that. The other thing is we've always got our eyes open for acquisition opportunities. This is a market that's got a lot more consolidation left in it. There are a number of businesses that are being presented to us at any one time. Our focus is to stick to our investment criteria, which is to go for the right brands in the right locations. The Drayton deal was a good example of that. The one you'll see coming up is another good example of it, and these are the businesses we'll focus on going forward. So lots of opportunities. The very short term, obviously people are wondering what the effect of Brexit's been. So we think on the supply side everything will be good. The manufacturers will still want to push volume into the UK market. Most of them have got an excess capacity, and the UK is still a great market for them to do business in. So the cars are coming. If there's any uncertainty in the short term, it will be around consumer demand. Good news is that we've tracked order take since the day of Brexit. And it's in the same place it was this time last year, so no evidence of a significant fall off. Crucially, we track our advanced orders going into the plate change month of September. Again, pleased to say that that's where it needs to be. But in the longer term, medium to longer term, we continue to believe that the fundamentals are very resilient. New cars will continue to grow with GDP and population. There's clear evidence going back decades to show that. Used cars are in a good place. Dealership after sales is naturally going to grow over the next few years because of the increase in registrations. So, the macro outlook is pretty positive.